So, hello friends, today we are going to continue with the concept again. That means we shall start continuing the problems. We shall continue with the problems. Okay, we are going to now start with illustration number 3. Before going to this illustration number 3, let us see what we have discussed. We have seen in the illustration number 1 and 2. But in this illustration number 2, we have seen how to dishonor the entry. That means how to see these dishonor entries, how to endorse the bill to another person. And in the first question we have seen how to discount, right? And now in this question, let us see how to retire the bill, retirement of a bill under rebate. This is what retirement of a bill under rebate we can say. Okay, so let us use this some broader one. Okay, yeah, let us now start the question. Let us now start with the question. Okay, right. Illustration number 3. On 1st January 2020, Ankita sells goods for 5 lakh rupees to Bhavika and draws a bill of exchange at 3 months for the amount. Okay, Bhavika accepts it and returns it to Ankita. On 1st March 2020, Bhavika retires her acceptance under rebate at the rate 12% per annum. Record these transactions in the journals of Ankita and Bhavika. So they have asked us to prepare in the both books of accounts. Let us draw some boxes for her. That means for both Ankita and Bhavika. No, not many entries will be coming, or maximum 3 or 4 entries will be coming in both the books. So let me draw here for amount in rupees. Here let us go for have ledger folio, that means LF number. This is for total particulars, the entry would be for particulars. And let us have the same thing in the other case also. Don't confuse, I am not drawing the ledger folio column. I am having here the journal for both. Let us have here now the same columns would be there. Or yeah, right. Now let us have some things here. So up to here we are going to record in the books of Ankita, and this is Ankita book, and here we are going to record Bhavika. Here we are going to see Bhavika books. Ankita books and Bhavika books. So okay, Ankita books and Bhavika books. Let us have here the same things. So here I am writing date, particulars, LF number and amount. Here in the books of Bhavika again I am writing the same columns, date, particulars, LF number, amount in rupees. Okay, let us have some the smaller one. So what is happened here? On 1st January 2020, Ankita sold goods to Bhavika. So what we can write on the same entry? 1/1/2020. So on 1/1/2020, what she will be writing, what Ankita will be writing? She sold goods to Bhavika, right? So she writes the entry that Bhavika account debit to sales. Bhavika account debtor to sales. Okay, being goods sold on credit. How can you say that the goods are sold on credit? Simply, this is the bills of exchange. 99.99% concept would be on the basis of credit sales only. That because with the credit sales only, this the concept of bills of exchange has come into force. Being goods sold on credit, we can say. For what is amount? 5 lakh rupees. Okay, I did not write here the debit and credit things. No problem. Let me erase this LF number column, and I can write here in the place of LF number the debit and credit amounts. Okay, let us go for writing like this. Here I am writing 5 lakh rupees, and here I am writing 5 lakh rupees. So this is a debit side and this is credit side. Okay, and in the same way here also I am going to erase, so that there will not be any confusion, any sort of confusion here. So in the same way, what Ankita is going to write, or what Bhavika is going to write the entry, she has purchased the goods from Ankita, so she writes the entry for 5 lakh rupees. So purchases account debit to Ankita account for 5 lakh rupees, and the same in narration would be what? Being goods, here they have, I have written purchase sales. So here the goods purchased on credit we can write. Okay, first entry completed. Let us close this first entry. Okay, now in the books of Ankita, what is happening? Ankita is going to draw a bill of exchange on Bhavika for what? For which she writes the entry bills receivable account that are to Bhavika account. Okay, what Bhavika is going to write, what Ankita is going to record in her books. She is drawing a bill of exchange for which she writes the entry on the same date on 1/1/2020, that is 1st January 2020. Bills receivable account that are to Bhavika account for 5 lakh rupees. I'm not going to write the narration, time consuming. But in our examinations we should write these narrations. You know how to write these narrations, right? I can't explain you all this. We are now dealing with this bills of exchange. Okay, bills receivable account that are to Bhavika account. What is now we are going to have on the same date 1/1/2020. How Bhavika is going to record in our books? Here bills payable is for Ankita. Bills in Ankita books, as she is drawing the bills of exchange, she is going to record the bills receivable. Now this bills receivable is being accepted by Bhavika, right? So what Bhavika is going to record? Ankita account that are to bills payable. Here this is the entry which would be there. So this is what second entry which we are going to record. Now with these two entries we can understand some concept again, not related to simply bills of exchange, whole related to accounts topic, right? Here previously Ankita sold goods to Bhavika on credit, for which Bhavika has become debtor of Ankita. In the same way, in a similar sense, Ankita has been our creditor in the books of Bhavika. So Ankita is creditor for Bhavika, Bhavika is debtor for Ankita with this first entry. With this first entry, bills Bhavika account debtor to sales and purchases to Ankita. Ankita become creditor and the Bhavika become debtor. So with the second entry, whenever Ankita draws a bill of exchange on Bhavika, what Bhavika has become? Bhavika's name has been taken out from the list of debtors. For removing the names from the list of debtors, simply erasing the name is not required. we need to pass some entry for which we need to credit, because if we increase our debtors value, we shall, that means if we increase our assets value, we shall debit the books, right? We shall debit in our books. If we want to decrease the value of assets, we need to credit the entry same. See here, we have, what we have done is that, like that. I think you have understood. In the similar sense, Ankita has been our creditor in Bhavika's book. After receiving the bill, what Bhavika does? Bhavika removes the name of Ankita from her creditors list, for which she credit. That means in order to increase the liability, we shall credit the amount. In order to decrease the liability, we shall debit with the same amount, right? So she has taken out Ankita from her creditors list. Okay. Now, with the what is the third entry? Let us now continue reading the book, reading the question. Bhavika accepts it and returns to Ankita. On 1st March 2020, Bhavika returns her acceptance under rebate of 12% per annum. Why does he give? Why has he gave this question? Why he has given this statement? Let us understand. First of all, what is the amount of bill Ankita has drawn on Bhavika? Let us see. Ankita has drawn Bhavika draws a bill of exchange 3 months. This is the key point here. We need to understand. 3 months bill of exchange is there here. So let us find out the due date. 1st January 2020 is the date of bill drawing of a bill. Okay. After 3 months means what? On 4th April 2020 the due date will be, right? That means on this due date, on or before this due date, Ankita has to, sorry, Bhavika has to pay the amount to Ankita. But what happened in the middle of these days, that is on 1st March 2020, she has paid. That means early payment has been made by Bhavika to Ankita. What she will be getting, what Bhavika will be getting is discount, because if we are going to make some early and prompt payment on or before the due date itself, then the purchase, that means the creditor would be allowing some discount, right? Discount allowed, we can say, because we are going to have in our books of accounts. Discount received is nothing but we are receiving discount for what we purchase. Here also same, we are going to allow the discount to Bhavika, and Bhavika is going to receive the discount. Discount here, the term discount is an expense allowed. Discount allowed is an expense for Ankita, and it is an income for Bhavika, right? Because Bhavika is receiving the discount, for which she writes the thing by discount received. Discount received is an income, discount allowed is an expense here. So what we are going to have the entry here for retiring the bill, simply for a dishonor of a bill, for retirement of a bill, entries would be same. But here if we want to provide the rebate, we need to debit the discount in case of discount allowed, and we are going to credit in the books of discount receiver, right? Here Bhavika has been removed from the books, Ankita has been removed from the books. Now what we are having, some assets, new assets, bills receivable and bills payable are the two assets which we are having now. If we want to remove these two, one asset and one liability, what we are going to do? We are going to credit this bills receivable. So two bills receivable account. In order to remove this liability, we are going to debit bills payable. So bills payable account, debit, right? For total 5 lakh rupees, we are going to write this entry for 5 lakh rupees. On which date? On 1st March 2020. On 1st March 2020, we are going to write this entry. Now, as Bhavika retires her acceptance under rebate of 12% per annum, what is happening here? We are going to get some money after discounting the bill. That means after discount, we are going to receive the money, for which we write the entry bank account debit. We are going to debit bank or cash. We can both, any of the things what you can write, no problem here. But usually this bills of exchange is deals with the bank transactions. That means the huge amount or simple amount also may be passed through checks only. So we can go for directly bank account debit, and we are going to allow some discount rate, discount account debit, discount allowed, we can have discount allowed account debit also, account debit to bills receivable account. Here in this case we are going to pay some amount rate to bank account, to discount received account we can have here. Now let us calculate what is the amount of rebate. 5 lakhs into 12% rebate into 1 divided by 12. What is this 1 month? 1 divided by 12. She has retired she has retired Okay, let us now continue. I'm sorry for the trouble. So 5 lakhs into 12% into 1 divided by 12. What is this amount of 1 divided by 12? She has retired the bill at the 12% per annum on 1st March 2020, right? On 1st March 2020 she has retired the bill. That means 1 month before she has retired the bill, right? For which she gets a discount for that 1 month only. In the same sense, in the same case, the same amount is allowed is received as discount, 12% per annum into 1 divided by 12. This is the discount received. Now with the help of calculator I think you know how to calculate this value. Let me say 5 lakhs into 12% into 1 divided by 12. 5000 rupees is the discount here. Simply question has been completed. The what is the remaining amount of this 5000 from 5 lakhs? 4,95,000. Same here also. Same here also. What is the amount of money which has been going from Bhavika's books? 4,95,000. And here 5,000 is the discount received. This is how you can go for writing in the books of both the parties. By understanding these situations, by understanding in the books of Ankita and Bhavika, we have seen our the third concept, retirement. Now up to now we have seen the many concepts we have completed. Actually we have seen how to endorse in the books. Endorse means what? Endorsing means sending our bills receivable to our creditor directly, and asking him to go for taking the amount after the due date. If we are going to get those problems also, so don't panic. We shall go for continuing the problems. No, 1 second friends, 1 minute. We shall go for illustration number 5. Illustration number 5 we are going to now take into the consideration. Illustration number 5. On 1st January 2020, Vilas draw some bills of exchange for 10,000 due for payment after 3 months on Eknath. Okay, Eknath accepts to these bills of exchange. 4th March 2020, Eknath returns the bills of exchange at a discount of 12% per annum. You are asked to show the entries in the books of Eknath. Simply, the same type of question has been repeated with some difference. I think there is a same percentage also. We have to show in the books of our debtor. That's it. Here we have seen Bhavika's books. Now we shall show in Eknath. You can continue. I shall explain you once again. On 1st January 2020, Vilas draws a bills of exchange for 10,000 rupees. Okay, now Vilas is drawing a bill of exchange on Eknath. What does it imply? Eknath is accepting the bill, for which it becomes bills payable for Eknath. So here is the entry on which date? On 1st January 2020, Vilas account debit to bills payable account. So Vilas account at auto bills payable account being bill accepted for how much? For 10,000 rupees. Okay. 1 second, friends. Wait for 1 minute. Now, what? I'm sorry for the disturbance. On 1st January 2020, what Eknath is going to record in his books, because Vilas account data to bills payable, because Vilas is drawing a bill of exchange on Eknath, for which Eknath records the entry as Vilas account data to bills payable. Vilas account data to bills payable. This is the entry which he records. Okay. Now, on 4th March 2020, so there is some transaction again. There is some transaction. On 4th March 2020, Eknath retires the bills of exchange at a discount of 12% per annum. Okay. Eknath is retiring the bill of exchange at the 12% per annum on 4th March 2020. I think there is a similar date, right? Similar date is there here. Similar date is there here also. So what we can have here now? Okay. Simple. On one month before, she has why I am stopping is I am making you to think. Okay. Now think once how to do this problem. Because I have explained you the previous problem only directly. The previous problem which I have explained you is of same thing, right? The same thing which we are having. Okay. So what would be the amount of discount? What is the entry which we are going to record now? Simple, very simple. On which date? On 4th March 2020. 4th March 2020. As what is the due date here? 1st January 2020 is the date of bill. and from this we are going to have some three months. That means what is the maturity date? 4th March 2020. Sorry, 4th April 2020 is the maturity date, and before this 1 month, that is on 4th March 2020, that is before 1 month, he is going to discount the amount. So what is the amount which he is going to pay to discount received will be there here, because we are writing in the books of Eknath is for debtor here. In the books of debtor we are going to write this enter, so discount will be received by him. So to discount received, and he is going to pay the amount to bank account, and he is going to debit whose amount, whose the what is the thing, bills payable he is going to debit. So bills payable account debtor, bills payable account debtor, bank account to discount received. So the same thing, right? So what is the amount, what this is total bill amount 10,000 rupees, and of which 10,000 is 12% into 1 divided by 12. Before 1 month he is going to discount that bill. 12% into 1 divided by 12, 100 rupees is the discount amount. So discount received is 100 rupees. 10,000 minus 100 is 9,900. This is the entry. And illustration number 6, when you see the same question is there. Illustration number 6 is also the same question. On 1st January 2020 we are going to have the journal entries in the books of villas. I think the same question also here, the same thing is repeated. Let us now have in the books of villas also. In the books of villas is nothing but what happening, villas draws the bills of exchange for 10,000 rupees on Eknath on 1st January 2020. So on 1/1/2020 Eknath account data, sorry, bills receivable account debit to Eknath account simply. So bills receivable account debtor to Eknath account. This is the amount for 10,000 rupees. So 10,000 rupees. First entry has been completed on 4th March 2020. What is the entry? He writes bank account debtor, discount account debtor, that means the discount allowed account debtor, to bills receivable account for 10,000 rupees. He is going to discount for 9,900 he is going to receive, and 100 rupees is a discount which he is going to allow. The same amount 10,000 into 12% into 1 divided by 12 is the amount of discount which he is allowing. So illustration number 5 and illustration number 6 are both same. Now comes the good question, the illustration number 7. Let me go for adding that one also. So let me add here the next question also. This would be some trick question, and it is related to insolvency. I think you might know about this insolvency. I think you know about insolvency. What is this insolvency? Insolvency means not able to paying them or not able to receive the amount. Insolvency means that, right? Now let us go for having the question on insolvency. Let me highlight with this marker highlighter. Mr. David, okay, it is not visible. Mr. David draws 2 bills of exchange on 1/1/2020 for 6,000 rupees and 10,000 rupees. The bills of exchange of rupees 6,000 is for 2 months, while the bills of 10,000 is for 3 months. Okay. These bills are accepted by Mr. Thomas. So David is drawing 2 bills of exchange for rupees 6,000 and 10,000 on Thomas, on which date? On 1/2020. The first bill is for 2 months and the second bill is for 3 months. Okay. On 4th March 2020, Mr. Thomas requests Mr. David to renew the first bill with interest rate 18% per annum for a period of 2 months. Okay. For a period of 2 months, he is asking to renewal of a bill. The first bill is being renewed on 4th March 2020. Okay. for 2 months again. He's asking 2 months more for paying the amount of first bill. Mr. David agrees this proposal. Okay. On 20th March 2020, Mr. Thomas edits acceptance for 10,000 rupees. That is the interest rebate being 100 rupees. Okay. Okay. What is happening here on 20th March 2020? On 20th March 2020, what is let us erase this one. If we erase this one, then we are going to understand what would be happening here. One second, friends, let me erase all these things. One second, friends, it is taken some lag. Let me have for you, no problem. 1 minute, 1 minute. Yeah, I have erased this one so that we are not going to get confused again. Let me continue from the fourth line, which is on 20th March 2020, Mr. Thomas retires the acceptance for 10,000 rupees. The interest, the rebate, that is discount being rupees 100. Okay. Before the due date of the renewal bill, Mr. Thomas becomes insolvent and only 50 rupees in a paisa, 50 paisa in a rupee can be recovered from his estate. We are required to give the general interest in the books of Mr. David. Okay. Very good question, actually. Very good question. So I'll explain you. What is this one? What is this one? Let me explain. I shall explain you not by writing, by orally. David has drawn two bills of exchange on Mr. Thomas. Okay, the first bill is for 2 months, and while the second bill is for 3 months. You know all the things because I have read the question also. Okay, what is happening here on 1 month 2020? That is on 1st January 2020. The first bill is for 2 months. Okay, then what would be the due date here? What would be the maturity date, or you can call both the things? What would be the maturity date?